Barks Alpha here, reporting for Newshound from the City of London with your 24-hour crypto news roundup. On today's bulletin, Fidelity and the digital dollar kill switch. The UAE enters the stablecoin race. The UK opens stablecoin regulation inquiry. Binance Bitcoin inflows sink to 6-year lows. And Citrea Mainnet launch brings ZK power to Bitcoin. Let's dig. The gap between traditional banking and blockchain is shrinking as Fidelity launched its Fidelity Digital Dollar, FIDD, on the Ethereum mainnet. Issued by Fidelity's National Trust Bank, the token is backed 1-to-1 by cash and short-term treasuries, but comes with a major catch. Fidelity retains the explicit right to restrict or freeze any address at will, effectively adding a compliance kill switch to the blockchain. In addition, the move is part of a shift in how retail and institutional capital is managed. According to a report by CryptoSlate.com, Standard Chartered analysts warn that traditional U.S. banks could lose up to $500 billion in deposits to stablecoins by 2028 as users trade stagnant savings for utility. Following the launch from Fidelity, which happened to coincide with Tether's launch of USAT, the United Arab Emirates has officially entered the global stablecoin race, with the UAE Central Bank granting its first approval for a regulated, dirham-backed digital asset. The move is designed to support the nation's position as a global crypto hub by providing a bridge between local fiat and the digital economy. Unlike offshore alternatives, the new stablecoin will operate under a strict regulatory framework, integrating directly with the UAE's real-time payment systems. The launch aims to streamline cross-border trade and remittances, and marks a major milestone for Middle Eastern financial sovereignty in the digital age. Meanwhile, as nations scramble to keep pace, the House of Lords Financial Services Regulation Committee has opened an inquiry into the UK's proposed stablecoin framework. The probe comes as the Bank of England prepares to finalize rules for systemic stablecoins by the end of 2026, a move that could see major issuers granted direct deposit accounts at the central bank as a backstop. However, officials have warned that widespread stablecoin adoption could drain traditional bank deposits and reduce essential credit flow to the UK economy. With written submissions open until March 11th, the inquiry will decide how strictly the UK police digital pounds within the nation's payment infrastructure. Next up, in a potential sign of investor conviction, Bitcoin inflows to Binance plummeted to their lowest monthly levels since 2020. Monthly deposits of BTC now average between 5,700 and 5,800, a massive drop from the long-term historical average of 12,000 BTC per month. This shift suggests that even after a recent 30% price drawdown, investors are refusing to move their coins onto exchanges to sell, choosing instead to hold. Analysts suggest that because Binance controls a large chunk of global trading volume, this drought could assist in starving the market of selling pressure, and may be an indication that some weak hands have exited, leaving a base of high-conviction holders, despite the current market uncertainty. Last up, we report on the launch of the Citrea Mainnet, the first application layer built to activate dormant BTC capital that utilizes ZK proofs and BitVM technology. Citrea brings cBTC, a trust-minimized version of Bitcoin that allows users to lend, trade, and earn yield directly on the Bitcoin network without relying on centralized custodians. Accompanying the launch is CTUSD, a native institutional-grade stablecoin designed to provide seamless banking rails between Bitcoin collateral and fiat systems. With over 30 decentralized apps, known as BAPs, ready at launch, spanning lending protocols to private payment tools, Citrea is positioning itself as an entry point for the new era of Bitcoin-native capital markets. That's it for today, dogs. Remember to share with the pack, keep your noses to the ground, and your ears pricked so you never miss a beat. Reporting for Newshound, this is Barks Alpha. Yes, I do.